It's the beginning of 2026, and what most people consider to be a fresh start is a complicated and unusual period when it comes to investing. We've still got a lot of political uncertainty all over the globe that's not looking like it's going away anytime soon, which has been making the market swing all over the place recently. Even if you're looking at something like the Nasdaq 100, which has had an amazing 24% run in the past year, we've still got a huge dip in the middle that a lot of people were concerned about. And on top of that, some of those returns are offset by the fact that the dollar has lost quite a bit of its value compared to other mainstream currencies. Inflation is still big, the purchasing power of customers has been reduced quite a lot, and at the same time the job market is still awful. And if everything that I've mentioned wasn't bad enough already, there's of course the ongoing narrative of the AI bubble, which is going to burst soon because of all of the companies that are shoving AI and LLMs down our throats. I mean, come on Razer, who even asked for this? Considering everything, it has become very difficult to know how to best invest your money, and the biggest question is, what's the best strategy to make sure that you end up on the winning side? Well, I can't really help you with that because in reality, no one can predict what the market will do unless they have insider information, which is illegal, don't do that. And if anyone is trying to tell you otherwise, they are lying or delusional or just trying to sell you something. But what I can do is share with you my updated strategy for this upcoming year, not as financial advice, but as a way for you to get inspired to create or adapt your own strategy. I've had to make some interesting choices this year based on my current plans, but also what I've learned from 2025 and the years prior. Some of which I never expected that I will have to. But I'm going to share those too because they might help you out as well. First, before we get into the actual strategy, let's take a look at some ground rules. Some aspects which I believe should apply to most investment strategies out there, not just specific to this one. Number one is to invest consistently, month by month. No matter how good your investment strategy is, it won't work if you're not actually investing. I've been investing now for over 5 years, and during that entire period, I believe there was only 1 month where I didn't invest anything at all because of some late invoices from some clients, completely separate story. But I believe that this rule is what enabled me to make the most progress towards my financial goals. So don't go and underestimate this rule and say that it's something generic and that it has no impact. Instead, focus towards being consistent and you will see the results that you want, no matter the strategy. The second ground rule, invest as much as possible and also make an effort to increase that amount. After a certain point with any strategy, you will get to a point where you can't increase the percentage of returns that you can get, and then you need to increase the volume if you want bigger returns. That's why I have this rule, not just to invest the money that I have left over at the end of the month, but to actually make a conscious effort to increase that amount. One good tip here that I want to share with you that can actually make an impact, not just keeping on buying a coffee one time, is to delay big purchases if they are not urgent. Because most of the time, that thing that you want to buy can wait 1 or 2 months until you have more money. To give you an example, I've actually had to make one of those decisions myself recently because I was thinking of getting a new GPU to help with my editing process. But when I saw how high the prices are at the moment, I've decided that it might be better to wait a couple of months and hopefully they might go down a bit. In the meantime, I've been able to find a workaround in the software that I'm using for editing. It's helping, but in other ways, and it's definitely not a permanent solution. But for now, it's helping me push that purchase just a little bit longer. And the final rule, no margin. I've been burned in 2025 on a test portfolio by using margin, and I'm not doing that again. Now, leveraged instruments on the other hand, where I'm not paying the interest rate myself, can be a different story, but only in specific situations. Now that we've got the general common rules out of the way, let's get into the specifics of the strategy. And there are 2 parts to this. The first part, which is allocated 70% of the amount that I want to invest each month, is all about improving my cash flow. And in order to achieve this goal, we're going to use one specific instrument, the JP Morgan Nasdaq Equity Premium Income Active ETF. GEQP for the UCITS European version or GEPQ for the US version. Now just to explain a bit about this ETF. It invests in the Nasdaq 100, which gives you exposure to the US tech sector, and at the same time it aims to generate a monthly income by distributing dividends generated from selling cover calls on its holdings. Now, before we dive deeper into why I'm choosing this specific ETF, I just want to remind everyone that this is in no way financial advice because in general, this might not be a good solution. There are actually two problems here. The first one is with the cover calls. I'm not going to explain them because they are very complex, but the main disadvantage is that you're capping your upside, which means that in a bull run you might miss out on some of the growth. Besides that, which is already a big deal on its own, you also have the problem that dividends get taxed whenever they get distributed. Instead, if you invest in something that grows over time, it only gets taxed when you sell. Considering those aspects, if you're looking to invest in something to take full advantage of its growth and also to pay the least amount of taxes, this ETF might not be the best choice. So why would I choose to include it in my strategy then? Now, like I've mentioned, this first part is all about increasing my cash flow, which is a piece of advice that I took from a bigger investor than me with much bigger pockets, which I've had the pleasure of talking with recently. And he said that if I want to grow as an investor, I need to increase my cash flow. The classic version of this advice is that if you want to become financially free, you need to find a way to make money while you are sleeping. But this is actually not the reason here. It's actually so I can increase my firepower for investing. Up until now, I've been using the revenue from my businesses to invest into over 30 private startups and other assets, but those are long-term opportunities, 5, 10 years or even more, with no cash flow. That in essence is a good concept, but it can become inefficient pretty quickly once you get to the higher ticket investments. And then you need to generate more revenue, which can be extremely hard. That's why instead I want to focus on increasing my cash flow. So instead of investing in order to increase my net worth after a couple of years, instead I'm investing in order to increase my investment power, so I can invest even more. Another reason for choosing this specific ETF is the instability of the market and the bad outlook considering also the AI bubble, or more correctly the LLM one. Looking at the current state of affairs and also how overvalued some companies might be at the moment, I believe we're going to see many more drops in the market going forward. Some smaller ones and also a possible big crash when it comes to the AI bubble. This kind of ETF with a cover call strategy is supposed to perform the best when there's a slow rolling bear market and also during a crash because it has less volatility. So you can think of this ETF as a defensive investment, so I can get some exposure to the market and also some income, but also being prepared for when the bubble will burst. Going into the second part, which has allocated the remaining 30% of the investment amount, it's actually split in two choices. And I can choose on a month-by-month basis in which I want to invest, but both of them have the same goal: high growth. One of the options is to continue with what I've been doing so far, investing in startups, which is extremely risky and can take a long time until you can see some results, but also you can get 20x returns or even more from one single opportunity. Like I've mentioned, high risk, high return opportunities. Another big advantage here is that you can learn a lot from each and every opportunity that you invest into, information that you won't be able to find on the internet, things that you can only learn in practice by building a company or investing in one. The other option is to invest on the stock market, but in much more riskier opportunities that fit the thesis of frontier tech companies. Some people would also refer to them as deep tech, but I like frontier because they are pushing the limits of what technology can achieve. Two examples here just to give you an idea of what I'm referring to. Not financial advice: YonQ, which is building quantum hardware, and Rocket Lab, which is building spaceships, satellites, and so on. And that's mostly it about the investments. There's one more part about the strategy that I'm looking to implement, but it's not yet set in stone, and that's that I want to move countries. I currently live in Romania, which has been increasing a lot of its taxes in the past couple of years, and it's no longer worth it for me to stay here. There's nothing set in stone yet, but one of the options that I'm looking at is Spain because it has Beckham's Law, which is very attractive for me as an investor. If you're interested to hear more about this, follow me because I will be talking more about this when I have the final solution, but until then, let me summarize for you the most important aspects regarding this strategy that we've talked about. So the core principles that you can take away from this strategy are the following. First of all, I'm looking for a defensive solution against the political instability and the AI bubble that will happen. I mean, just think about it. We're 5 years into AI replacing all jobs, especially software developers, and that's nowhere near close to happening. The most that we have is this. so they can stretch it much further and the bubble will eventually pop. The second core principle is that I'm looking to increase my cash flow because I need more firepower for my investing, but also for some potential big projects that I have lined up in the future that I'm going to talk about more in a separate video. That and the general rules, remember those and create or adapt your own strategy so you can end up on the winning side in 2026. Thank you for watching until the end. Don't forget to leave a like if you've enjoyed the video. Let me know in the comments what's your own strategy for 2026. I can give you some feedback or just if you want to share it with other people so they can learn. And if you want to see more content from me, you should see some other options on the screen.